Hello, everyone. Joshua Hayes at BigWaveTrading.com. I hope you are all having a very nice weekend. Hope it was a profitable week for everyone. But I can tell just based on the rhetoric and commentary on Twitter that it wasn't that easy. And to be honest with you, this past week played out basically exactly as I said it would play out in my video lesson. We are stuck between important support and resistance. And right now, I know that to everybody probably watching this video lesson that this chart looks busy to you guys. But remember, to me, all that really matters at all is price and volume. I use that in conjunction with the moving averages. And that's really, if you force me to only deal with price and volume, that's all I need. All of this is just added confirmation. That is simply all it is. We are currently in an uptrend, and so far, we are seeing no real pullback. We've got support underneath of the 9, 21, 34 EMA, and you even have a 50 SMA down here, and it's above that 100 SMA. So all of those moving average lines have potential to act as support levels on any pullback. And for now, even though the data is mixed, even though this is a weird move off the low, we have weird leadership. The DIA is leading. Look at the DIA relative to its moving averages versus the SPY versus the QQQ and versus the IWM. And I hold on for a second. Got to make sure that the after hours data is off. Never. Okay. So, in my opinion, right now, the IWM and the QQQ should look like the DIA, and the DIA should look like the QQQ. This past week, even though the market didn't really go anywhere, it was an interesting mix of leadership, and it was mainly in the defensive industry groups. You basically had consumer staples, XLP, you had XLU, utilities, and healthcare lead with the market higher. It kind of feels just like that last leg up in December when we had the defensive industry groups leading. The only difference this time around is oil, energy, is not leading. So this is a really weird tape right now. And if it gets any weirder, I cannot pull up the equity put call ratio. I have always used a reading of 1.2 as a marker for any bottom in the market. On stockcharts.com, the equity only put call ratio goes back to 2003. The highest it's ever been was at the 2008 lows when it registered a 1.35. Just to let you guys know, the VIX back in those 2008 lows, as you can see here, we ended up going lower. But even if we looked at the reading back then, whenever it hit 1.3, we had a VIX around 37 before it ultimately bottomed after moving all the way up to almost 90. This time around, the equity put call ratio has hit 1.46 on Thursday, a level that I have never seen in my life. And if you asked me if the equity put call ratio was at 1.46, if somebody asked me, where do I think the VIX is? I'm going to answer without knowing that the VIX is at a minimal 50. It's at least at 50, if not at 60 or higher, 80, 90 with a 1.46 reading. But no. Instead, it comes when the VIX is in the low 20s. Guys, there is no point anytime that the equity put call ratio is spiked above 1.1 that I've had a VIX in the 20s. I've never had a VIX at 1.2 without a VIX above 35. I've never had a VIX at 1.46 ever, especially with a VIX at 20. So to say that this is a weird tape is an understatement. And what that tells me, I've got mixed ratio charts. I now see mixed macro data. I've got mixed bifurcated leadership in this market. I've got mixed internal data. But like I said, the lead one is those mixed ratio charts. I find it really odd that the market is doing well, even though I can't throw up this ratio chart, but the XLP to XLY ratio chart, the XLP is hitting a new high, the XLY is hitting a new low. Normally in good uptrends, the XLY leads. Now that I've added, so just to let you guys know, off this low, why should we be looking at pullbacks are good to buy? I'm triple green. It's what I call triple green on the daily. Now, if I go to a weekly, I'm triple green. If I go to a monthly, that's not the case still, but that's the highest time frame. Still on a weekly, triple green, daily triple green. You have to give the benefit of the doubt to the bulls. We're in an uptrend, but I'm having a tough time with this tape. Right now, my primary focus remains and has been for all of 2022, intraday time frame. I'm a small cap focused trader intraday. I have no problem really pushing it intraday because I've got my data. I know what I'm looking for intraday in the small caps. But this has been a very cold year for small caps. And I know for a fact a lot of professional day traders have been trading small caps for over a decade have said, multiple. I see it all the time. This is the most difficult year for small caps. So intraday, small caps aren't getting the majority of my capital. It remains big caps. However, I'm still operating with those break-even stops. That being said, once again, another week has gone by, not a single red trade intraday. Because as soon as I start taking profits after I enter, I have a break-even stop. Am I getting shaken out of a lot of names? I sure am. And it's happening on an end-of-day basis. And in fact, I put on a lot of canceling swing positions lately. And I'm not going to lie to everybody. I have irrational, illogical, tight stops. Same principles have been applying. If I'm green on the trade, I'm not giving it room to go red. So on that note, I've been shaken out of every single one of my can slim swing longs besides FSLR. I have finally ran out of shares of ELF. This was not considered a can slim swing long. This was considered a my quote quote setup via my volume, BOP, price characteristics. This one has done very well. It's been very smooth. And FSLR, which was actually a can slim swing long, not using my personal methodology, is working. Besides that, I keep getting myself into great leading stocks, but by being way too irrational with my stops, I'm getting shaken out, and they keep moving higher. So I'll let everybody know. I had a position in GFS, and I had a position in ON. They look fine, but ON got me on Thursday. GFS got long, started to take profits. So what does that mean? Break even stop. They got me on Thursday. It's okay. Why? It's this tape. I'm not going to make a big deal out of this, guys. You got to be okay with it. It's driving me a little crazy, and I like to be a little bit more animated, melodramatic in my video lessons for members, because I like to emphasize. I like to, I got some passion in me. I like to really stress and bring home the point. But in all reality, I know the market I'm dealing with. I know shakeouts are going to happen. I know I'm going to get ran. It's going to happen, and it's okay. Because ultimately, if you think that this chart's busy, this is what I'm looking at. Look at all the support levels below. Look at all of the resistant levels above. The dashed lines are Fibonacci retracement levels based off moves from critical low to highs, high to low levels, along with important and critical key resistance levels, moving average lines, and then that one big downtrend line. You can see right now we are really trapped in between a lot of support and resistance levels. In my opinion, if we don't ever have that capitulation bottom, And until we see a Fed pivot, and just to let you know, the dot plot for interest rate hikes is higher than what it was a week ago, a month ago, 3 months ago. We now have a potential for interest rates to peak at 6%. The market is now pricing in an above a 0% chance at interest rates peaking at 6% at some point late 2023. That is the first time that the market has had any indication, I cannot speak today, guys, has had any indication that it's possible we could see 6. So the Fed hasn't pivoted. We haven't had that panic bottom via capitulation sell-off where retail long-term investors panic out of their long-term holdings. So I think that we're going to remain choppy, guys. The bias is to the bulls short-term, but longer-term, we have so much resistance that we need to work through. I don't see how we get out of any of this range whatsoever. So I'm guessing that we're going to be range-bound in between 430 and 350 for quite a while. If I am wrong, awesome. My game plan will change. All of my analysis is based on what I currently know as of right now. On Monday morning, the Fed comes out and says that we're buying every asset on our balance sheet that we've ran off since the beginning of the year and that we're re-implementing QE. Do you think any of the analysis that you're hearing right now or seeing right now is still applicable following a major catalyst event like that? Absolutely not. Straight up bullish. Straight up want to buy any and all pullbacks if that happens. But as of right now, there's a lot of chop. Now, all of that being said, that leads us to what's currently working, the DIA stocks. So I bring this up because I want you guys to see that right now, the leadership is in these big cap names. EXPD. If the stock is a big cap, higher price, liquid, and has a dividend, got to give it a look. Most of these stocks are not actionable as of right now, but you better believe I'm watching all of these names for potential setups. Add them to your watch list if you want. Speaking of watch list, this is my leaders watch list as of last Sunday. Feel free to copy all those symbols if you want. I'll be updating this list on Sunday, and that brings me to my next point. We have reconstituted the quarterly portfolios. I'm in the middle of doing that right now, and on Monday, the quarterly portfolios, for the first time since going 100% cash in February, will be re-implemented. However, it's not 100% of the portfolio. I have 2 portfolios, Portfolio A, Portfolio B, 10 stocks, put 10% capital in each. We hold for 90 days. It's supposed to be 100% in good markets. It is. It's 100% in QE markets. It's 100% in bull markets. It's 100% uptrending markets. In this market, we're fighting the trend. The only reason why I'm even willing to do the 90-day hold this period is because we're in Q4. That's it. If it wasn't for Q4, these portfolios remain 0% cash. So how I'm going to deal with it, though, it's a quarterly portfolio, right? We're not in an uptrend, right? We're still in a bear market. We have no evidence that there's a bottom, right? It's a quarterly portfolio. I keep repeating that. Quarterly portfolio. Okay. I'm listening. I'm hearing myself. 25% of the cash on hand will be put in these 10 names in Portfolio A. And then in the other account that's segregated for the quarterly portfolios, 10 stocks, 10%, supposedly, is about how it's supposed to go in each name. But I'll only be working with 25% of the capital in that portfolio. So getting back to this current batch of leaders, I want you guys to all keep an eye on EXPD, IBM, to extended now. The 21 EMA is always where I'm looking for pullback entries on any stock that you see me review. KMB, dividends, guys. This is all about the current crop of leaders off the October lows with dividends. CTAS, remember, 21-day EMA. That's where I want to pick these up. ADP, GPS, Walmart. Guess who got shaken out on this day before the earnings gap up? I kid you not. Got long, took profits, break even stop. They got me. Kept it too tight. That's all right. That's this market. ROST. Keep an eye on that for a pullback. DDS. Getting a little bit frisky with this one. Juniper, though, big cap name. That's why you see it on this list. ANET. Here's a growth name that I'm interested in. My chicken money flow on a daily wants to turn bullish. We'll see if I can get an entry. I haven't been able to on a lot of these. 21 EMA is the hopeful retest. Visa, MasterCard, Pepsi, near its 21. Monster, Coca-Cola, exciting names, right, guys? LANC, exciting names. MKC, starting to get the picture, right? But now I'm going to do you guys even one better. I'm 100% sure that we have a leading industry group with leading stocks. And if this was a bull market, I would probably be taking positions and holding these stocks, no matter what, until they violated key levels. The stocks I'm talking about are solar stocks. The sector as a whole has government funds flowing into it. The leading stocks in this sector are reporting amazing numbers. So, you guys already know that I have a position in FSLR. This is a leading name. I also took a position in ENPH. Guess who got shaken out on this day? I kid you not. Welcome to the market. That being said, it's consolidating. It looks really good. ENPH has a 99 composite rating on MarketSmith. Amazing earnings and sales growth. This is a leader. If I was forced to buy 4 stocks right now and go away for a year, and I can't touch or look at my portfolio, even knowing that we're in a bear market and that we could go lower, I would get long ENPH. Weekly, shaking money flow. Monthly, shaking money flow. We're green across the board. So it has that going for it. Cup with handle forming. Little ugly reversal on Friday, but still holding up. FSLR, I'm already long, but look below. Shaking money flow. Look up what the indicator does. I do not have time to discuss it here. Daily, weekly, monthly. Looks pretty good. FSLR is the leader in the industry group. Only has an 82 composite rating, but a 99 EPS rating. A stock I am personally long via my own setups. Cup with handle is forming. ARRY. Huge jump in EPS and sales growth the past 2 quarters. And it beat the estimates this quarter round by 100%. That 100% number always gets my attention. ARRY, 97 composite rating. And then the last one, SHLS, 97 composite rating. Big jump in EPS and sales growth in the most recent quarter. They guided higher for their estimates for the full year 2022 and for 2023. They beat earnings by only 25%, only 25%. But this is a leader. Shaking money flow green on the daily. On the weekly went green. And on the monthly, it's green. So this is the leading industry group. If you got to really focus on 4 names, pick them up on pullbacks. SHLS, ARRY, ENPH, FSLR. Leading stocks in a leading industry group in a leading sector with government funds flowing to it. I don't see how you can go wrong there. All right, everybody, we'll wrap the video lesson up. If you enjoyed the video lesson, learned something, give me a thumbs up. subscribe, share it, comment. Let's have a discussion about these leaders. Do you think that these stocks are going to be able to hold up if we head into a recession in 2023? I'm curious to know what you guys think. All right, guys. Love you all. See you next weekend.